Hello everyone, welcome back to the management accounting class. So in this class, we are going to deal with the marginal costing. So that too, very simple problems on the marginal costing to understand the main concept, that is marginal costing equation. So here, there is a problem which deals with Karnataka University question paper. So let me share the document here. Okay. Yeah. So let's come to the problem. It is asked in 2019 for 5 marks. From the following information, that is particulars, calculate PV ratio, contribution, profit. So these three are asked to calculate. Given information is sales 20,000 units at rupees 20 per unit and variable cost rupees 10 per unit. Fixed cost is rupees 1 lakh. So from these three information, we are going to solve the problem. So what all are asked to you? The first thing is asked is PV ratio. So from the marginal costing equation, we can easily derive the PV ratio. Let me take you to the solution here. So how to calculate PV ratio? This PV ratio is PV ratio is equal to contribution divided by sales into 100. Sales or selling price into 100. So in this given information, what we can do here is we can split it for the working note. We can write here working notes. So what we are doing here is preparing an income statement, that is selling price is 20 rupees per unit. In that, variable cost is deducted 10 rupees, and the contribution we get is rupees 10. So PV ratio is a relationship between the contribution to sales, that is converted in percentage. So very simple, the PV ratio, we are going to calculate this side. PV ratio is equal to, so here I'm writing 10 rupees is a contribution, 10 divided by 20 rupees is a selling price into 100. The answer we get is 50%. So this is all about one part. First part we have done with calculation of PV ratio. Okay. So this is done. Second one, contribution they have asked. Contribution per unit we have shown in this statement, whereas total contribution, if we are doing, then we can easily do it here itself, multiplying the number of units. So the number of units given in the problem are 20,000. Selling price is 20,000, 20 rupees multiplied by 20,000 units. It is 4 lakh, right? And variable cost is also again multiplied to 20,000 units. So answer we get is 2 lakh. The total contribution here, easily we can ascertain, that is selling price or sales minus variable cost is equal to contribution. That is also rupees 2 lakh. So this we can show here. The number one calculation we have done, that is PV ratio. And second one is contribution is equal to sales minus variable cost. So sales are given in the problem, 20,000 units, 20 rupees per unit. It is 4 lakh. And that is also shown here in the working notes as a 4 lakh only. And variable cost is 2 lakh. The answer we get here as contribution is equal to 2 lakh, right? So we can write here only, it is 2 lakh. The space is not available here. So directly I will write here itself as 2 lakh. Two calculations we have done. And the third calculation, let me go to the eraser. I will erase all. And number 3 calculation, let me do here itself, that is profit. So how do we derive? Profit is equal to simple formula. Profit is equal to fixed cost minus, sorry, contribution minus fixed cost. It is not fixed cost first. What we are doing is eraser. Let me erase it. The formula that I get here is not fixed cost, but contribution minus fixed cost is equal to profit. So here directly we are taking contribution minus fixed cost. Okay, if fixed cost is more, then we get loss. If fixed cost is less than contribution, then we get profit. Okay, so in the problem, as all of you seen here in the working note, that sales were in the earlier slide, I have written sales were as a 4 lakh rupees. Variable cost was 2 lakh rupees. 2 lakh is deducted from sales. We arrive the contribution, right? It is also 2 lakh, and less fixed cost is given in the problem. How much it is? 1 lakh. And the amount of profit is, when we deduct fixed cost from the contribution, we derive the profit or loss. If fixed cost is less than the contribution, then we arrive the profit. If fixed cost is more than the contribution, it is loss. So here contribution is more by 1 lakh rupees. This is what the answer of third question, that is profit is rupees 10,000. So coming to this again, chat is done with contribution is 2 lakh minus fixed cost is 1 lakh. The answer we derive here is rupees 1 lakh as profit. So this is what is profit. We can mention here as profit rupees. We are highlighting our answers with box. Done. If you do this within 2 minutes, then you will get 5 marks for this. But this time they are going to make the multiple choice questions, right? So due to COVID, the multiple choice questions are asked to you. Very simple. Simple calculations will be there. Be perfect in this marginal costing statement. That is, sales minus variable cost is equal to contribution minus fixed cost is equal to profit. So simple logic it is. What is missing? Look at that. And if you derive sales minus variable cost is equal to contribution, and this contribution is equal to fixed cost plus profit, right? Or else contribution minus fixed cost is equal to profit. This is what the equation of marginal costing. So if you are very good in doing this, you can easily score whatever the marks are assigned for your examination within no time. Yeah. Then we will move on to the next problem in the next slide. Thank you. Be perfect. This one, that is marginal costing equation. Okay. So let me stop sharing and let me stop the video too. If you have any kind of doubts and all, feel free to ask it in the comment box so that I can answer that.